the Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at SDBullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Well, Eric, we haven't seen too much exciting price action either to the upside or to the downside this week in gold and silver, as it certainly seems that the cartel is digging in their heels at particularly the $20 level in silver and the $1,300 level in gold. Gold was able to clear the $1,300 level early in the week, trading as high as $1,325 on Thursday, and has consolidated down a bit to close the week just under $1,320. And in silver also traded above 20 with a spike early Thursday morning up towards 2040, but has consolidated back throughout the day Thursday, and again here on Friday to close the access market just under that $20 level. So what's your take here, Eric? Is it precisely that, the cartel attempting to defend $20 silver and $1,300 gold?
Yeah, I believe that that's playing out in the prices, and you can see a really interesting pattern too that we've seen a couple of times this year already in the differences between the trading patterns in silver and gold. Gold was able to get over 1,300, and it's relatively speaking, maintaining a reasonably tight range between 1,315 and 1,320, give or take, in the last 3 days. And if you look over at silver, it's kind of a different pattern going on because silver 3 days ago or 2.5 days ago tried to make a stab at getting some momentum going, hitting on a spot basis about $20.40. But it was taken down very quickly, and the pattern of having greater pressure put on silver as opposed to gold is that pattern that I was speaking of that's manifested a few times this year already and was also present periodically in 2013. The folks at GATA kind of speculate and call this the silver signal, as they say, where it's periodically easier for the cartel to manipulate silver to the downside. Also, silver equities in particular take it on the chin as well too, and this very often happens in advance of pressure that's put on gold, simply because silver is easier to manipulate for the first part, and secondarily that it's kind of a signal that traders in gold look at when silver comes under pressure. They say, oh, okay, maybe the cartel's going to try and push down gold, so we need to be on the lookout for that in the following week. But the devil's advocate flip side argument to all of this is that we have a lot of pressure in the geopolitical space. We have the stock markets coming under pressure because in part of high valuations and the tapering expectations being priced in, where it's not a direct removal of stimulus in total, but it's still lessening the amount of monies that are flowing into assets. So you're beginning to see that in the high-flying NASDAQ stocks in particular, taking it on the chin. The fact that we've lost all the gains that were priced into the stock market throughout the first couple of weeks of this year, and people are beginning to get a lot more nervous about what it means when the Fed is being strong-willed with tapering. And though it looks like they're going to probably get lower than I initially expected in terms of how much they're going to continue to put into the market on a monthly basis.
The Fed, Eric, has one more meeting coming up here, the end of the month, the 28th and 29th. Are you looking for one more occurrence of tapering, or you think they'll hold off here before the pause for the early summer?
No, I think they will taper this time around, and my speculation is that this will be the pause following this tapering, because we'll have 2 months where people are going to start pricing in lower stock prices because of just uncertainty in our economic backdrop and all of the expectations for further tapering. People are going to say, hey, if you're going to take away the legs under the stool that's supporting the stock market, I want to get out before somebody next to me pulls the trigger and sells. So I expect to see continued pressure in the stock market. And that will most likely, in the June meeting, mean that Janet Yellen and company will probably hold off. But maybe they'll do one more, and maybe it will take a reduction to, say, $25 billion per month in combination of Treasury purchases and mortgage-backed securities support. But I don't see how our stock markets can survive that kind of more aggressive tapering, because, frankly, the main reason why the markets are up where they are now is, in fact, all of the stimulus that's been put into the markets. So people are going to be pricing that in and pulling out of the markets. And the Fed is very concerned about that kind of stuff. From an economic point of view, they justify the wealth effect and how that translates into the economy. But more importantly, to their perspectives, they're basically the guardian of the banking system and the interests of the banking system, and in fact are partially owned by the banks. So they service their masters. And I believe that they'll be very hesitant to do far more tapering as they claim that they are going to continue to do. I think it's a smokescreen.
Before we move away from the metals, a quick update here for the listeners on the physical market at the wholesale level here in the U.S. for gold and silver. The situation remains with the U.S. Mint forcing the authorized purchasers on the gold side to purchase backdates, and they're not guaranteeing any current years, which has really spiked up the premium for any current year Gold Eagle products, as the primary dealers are not guaranteed any current years. Many of them are continuing to hold off their purchases. So that has continued here into mid-April. On the silver side, the official mint products, the Silver Eagles and the Maples, the tightness of the supply is easing up a little bit just towards the end of the week here. This week, for the first time in 2014, I believe, all of the authorized primary purchasers have Silver Eagles available live for delivery, that there's no delay. That's the first time that's happened in 2014. The Canadian Maples are readily available, as well as some of the other products in the official mints, like the Chinese Pandas, the Austrian Fills, and so forth. The one product we are seeing tightness in the market that has developed over the past week is 90% silver. And I was discussing with Eric before the show started, my gut tells me that we really just haven't seen a lot of exciting action in silver over the last couple of weeks, either to the upside or to the downside. And where the 90% is a product that there's no new supply coming onto the market, the only way to entice supply is to have people that hold it sell it back. And I think that's why we're seeing premiums jump a little bit here on the 90%, is due to the market is not moving enough to entice any sellers, so it's forcing the premiums on the buy side to come up a little bit, which then obviously force up the premiums on the sell side across the market as well, corresponding to that. We're still seeing the Sunshine Mint have about a 4 to 5 week delay across the spectrum of their products. But other than those two anomalies, the market is readily available physical products for delivery within a week or two for many of the wholesalers. So that's an update on the physical side of the market here in the U.S. And I want to shift gears now to the ongoing saga of Russia leading the move away from the U.S. dollar currency settlement in deals. And I've long said that the death of the dollar as the global reserve currency is going to be a death by 1,000 cuts. And it sure seems, Eric, over the last couple of weeks that the dollar's endured almost a couple hundred of those cuts in a short period of time due to the way everything has been handled and gone down with Ukraine and Russia and China's response.
Yeah, it's definitely something that has an evolutionary process. I always liken it to kind of like turning around an aircraft carrier. It takes a very long time for an aircraft carrier to make a 180-degree turn, and unfortunately, a lot of people in our space, in the precious metals community, a considerable amount of time worrying about an overnight shift or a weekend shift. And though that is something that will probably happen at some point, I think that at least half of the debasement of the dollar vis-a-vis other world currencies will probably take an evolutionary course over a couple of years. And what we've seen so far this year, in fact, maybe even better said, going back to the escalation of the Syrian crisis at the exact same time that Russia was hosting the G20 meeting with the specific agenda of how to, in fact, create a more balanced international reserve trading system against the dollar. All of these steps have escalated the amount of energies that China and Russia and other major countries in the BRICS, say Brazil or India, South Africa, and the G20 overall, minus the G7, the Western European countries within it, Canada. All of those countries are making bilateral agreements amongst each other to swap currencies to facilitate direct trading relationships. So you don't even necessarily need an entire organized, focused international regime change of the currencies at some G20 meeting. Russia and China are talking about doing a huge amount of trading in natural gas and oil and other resources directly in the last couple of weeks, responding to the escalation of the West's interest in trying to ring fence China and Russia with this Ukraine action. So, these things are, like you said, an example of a single cut amongst hundreds that we're seeing happening, and it's going to continue to happen. The dollar has been, bouncing around at the 80 level in the DIX major trading basket exchange, and the Fed is definitely worried about that. We can, compare statements from Janet Yellen to when the dollar bounced off of having sliced through the 80 level only about a week ago. And this is an ongoing battle of manipulation and then market perception management that the powers that be in the United States in particular are trying to execute to defend the dollar. But it's not going to work in the long term because it's a basic numbers issue, basic math. The BRICS countries alone represent 25% of world trading right now, and that's going to continue to expand. And the whole petrodollar edifice in particular is probably the tip of the spear where we're going to see the greatest change, where countries around the world are going to purchase energy supplies with currencies that they swap with direct relationships, say, for example, China and Russia, and China and Saudi Arabia, and many other examples. That's not something that the United States can stop. It's a response to changes in the global economy and our geopolitical power. So we'll see how this develops over time, but it's definitely marching along.
It sure is. Well, the other story that if we don't cover here, I'm going to get hundreds of angry emails of readers, SD readers, who couldn't believe we didn't cover the story in the show this week, Eric, was the news that broke Thursday night that none other than former head of JPMorgan Commodities Division, Blythe Masters, is under investigation by federal prosecutors in Manhattan relating to her statements in regards to FERC's investigation into energy manipulation by JPMorgan. And Bloomberg had a story that broke Thursday night relating to the investigation by federal prosecutors. And it shed a little bit of light that originally Blythe was part of the deal to sell off JPMorgan's commodities division to Mercuria, but it appears that Mercuria, along with all the other top bidders for the group, really balked at taking on Blythe Masters and the potential legal risks and associations that would come with her. So I don't think too many SD readers are going to be shedding too many tears for Blythe, Eric.
Yeah. Well, it kind of makes sense that they wouldn't necessarily want to have her within their organization because she has such a tainted history. It's a question as to whether or not she gets booted and is on her own, and who knows what that will mean from a legal liability from her own position. But JPMorgan had settled the FERC charges, I think it was back in July, for nearly $500 billion, if memory serves. So it was a significant case. And she's been involved with all of these derivative products that have gotten JPMorgan in hot water, whether it's the bundling of mortgage-backed securities products, or the energy trading, or the questionable actions that she's been involved with when it comes to precious metals. JPMorgan never had any kind of accounting when it came to Bart Chilton and all of his CFTC protestations to the contrary.
Yeah, the $410 million was the actual number that they settled with, but
what was that again?
$410 million was the amount JPMorgan agreed to settle with for the FERC charges against energy manipulation. And with the official severing of ties, and now the news today that, or I guess last night, that federal prosecutors in Manhattan are investigating Blythe Masters, it certainly looks that what many speculated several months back, that JPMorgan and Dimon could be preparing to throw Blythe Masters under the bus, that it could be in process. Do you see anything happening with the federal investigation now that she has been parted ways with JPMorgan?
I think she's more vulnerable, and because of that, there's a higher probability that the investigation will actually bear fruit, formally prosecute her, and who knows, maybe she'll actually be held into account to some extent now that she's not under the protective wing of Jamie.
I have to think it would be rather satisfying for all of our readers as well as the precious metals community if Blythe Masters was the first figurehead of the bank or high-up banking official to actually get put away in the crisis since 2008, because we really haven't seen any, I mean, other than Bernie Madoff, but other than Bernie Madoff, we really haven't seen any real criminal prosecutions.
Yeah, and this is completely speculation on my part, but there is a qualitative difference between, say, Blythe Masters and John Corzine, for example, when it comes to political clout and being part and parcel of the establishment. I mean, a John Corzine-type person has been involved with all kinds of things that are fishy at the very least, and yet, he gets a pass from the system, whereas Blythe Masters doesn't have those deep political connections, so the odds are not in her favor. I'd have to speculate because she doesn't have the ability to wear the Obama cufflinks into a prosecution.
You don't think she could borrow those from Jamie?
Yeah, I don't know. Maybe he really did throw her under the bus, but just was quiet about it, and it took a few months of the events changing in the bureaucracies of the Securities and Exchange Commission and various other regulatory agencies that may be involved in investigating.
Right, exactly. All right, so kind of reviewing the show and wrapping up here, we had gold clearing 1,300 early in the week and holding that level as the cartel attempted to cap its move off of the 1,300, and also the cartel capping silver at 20, with the cartel successfully able to induce a close just under the $20 level here in the access market Friday. Hopefully the overnight trading on Sunday night in Asia, and then as Monday begins, we'll be able to see silver clear 20 to the upside and get some action. We've had a couple of weeks here of consolidation in silver after really the strong move to begin 2013, so I will say that it's not too much to be unexpected, as silver did have a big strong move. I think it was up about 15% before the correction began in 2014. So really not too surprising to have a couple of weeks of consolidation and correction, and in my mind it's pretty healthy that we're seeing it stabilize at 20 and really not be able to break down below 20. And I think as we move on into the summer and fall of 2014, we'll see silver move off of that $20 level and at a minimum re-challenge the $26 level that proved the breakdown level last summer. So we'll wrap things up there. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at SDBullion.com.